I'm Charlotte McLeod with investingnews.com, and here today with me is Andy Schectman, president of Miles Franklin. Thank you so much for being here. Great to have you, and Happy New Year.
Happy New Year to you too, Charlotte. Good to be here. Thanks for having me.
Of course, really good to be kicking off 2026 with you. And I thought the right place to start is with silver. It's been on this amazing price run. I know we're a little bit down today specifically, but amazing price run to end 2025. And we'll get into the specifics of what's going on, but I thought we could start with getting your take on what triggered this breakout for the silver price.
Well, I mean, it was long overdue on so many levels for sure, but to me, what really has kind of exposed the general trend in the market, I guess you could say, are the amount of deliveries that we've seen on the COMEX. And, you know, one of the things that differentiates this market from any other that I've seen in 36 years is the amount of deliveries, both on the LBMA and on COMEX, where most of my career, less than 1% of contracts ever stood for delivery. And now we're seeing it over and over and over and over again. We'll go back 13, 14 months when Trump won the election, it all started. But let's talk, for example, just last month, December, we saw 12,575 contracts, which was a new all-time high for the month of December of silver delivered, which is 62,875,000 ounces delivered into COMEX. Now, if a mint box of silver Maple Leafs or Eagles weighs 42 pounds, imagine what 62,875,000 ounces is all about. You're talking many semi-truck trailers worth. And much of this, not all of it, but much of it leaves the COMEX. So who is the entity or entities standing for delivery? The lack of journalistic integrity is shocking to me across the mainstream, as this has been going on, not in an isolated one-off. This has been going on over and over and over again for going on 14 straight months. Now, here we are in January, month to date. We're looking at about 6 trading days so far, and we've already seen 5,451 gold contracts stand for delivery at 100 ounces apiece. That's 545,100 ounces of gold at times, $4,300-$4,400. You're into the billions of dollars 6 days in, and 6,321 silver contracts issued and stopped. In other words, someone took possession of it within the COMEX confines, moving it into an eligible category, which means it's not for sale. That's 31,605,000 ounces in 6 days. Now, this is what we have been seeing over and over and over and over again. And so to me, there's not much more you need to see. Much of everything else we see is noise. Of course, we can say, yes, the United States government created a critical mineral designation for silver. Certainly that's very bullish. And the same thing happened at the end of 23 with the European Union. They did the same thing. And then in retaliation to all of this, I guess you can say, everyone is focusing on the Chinese export ban or massive, I guess you could say, they are going to limit massively what leaves the country in terms of exports. All of the refineries that were exporting need to apply for a license out of Beijing, and the qualifications have become far more stringent. A much fewer set of companies will be allowed to export, and they have to be state sponsored. Well, the state doesn't want to issue silver because one thing that wasn't really caught as much, even by this industry, is the memorandum that came out in November where the Chinese said we are going to reprioritize exporting silver for national security, for domestic priorities. So in essence, you have a race going on, not by two brothers in 1980, the Hunt brothers, who realized there were more contracts than bars and tried to buy up all the contracts and stand for delivery. No, this is sovereign nations and I guess you could say prioritizing national security. And it's a different thing altogether. But I'll just simply say this, Charlotte. For years, and I've been saying with you on every show we've ever done, that the most well-informed, well-funded traders, and I'll highlight well-informed, that being the central banks, have been standing for delivery since 2020. Very unusual, because really no one ever stood for delivery. And this started to accelerate, but all along the United States was not part of this game. We were seeing it in the global south with the BRICS. And now all of a sudden we are seeing the most well-informed traders in North America stand for delivery in massive amounts and such that it's impossible for me to ignore. And I just wonder where all the experts, the so-called experts, are in the mainstream, the Jim Cramers of the world, who haven't even said, you know, it's interesting. Who's bringing in hundreds of billions of dollars of metal into the COMEX? It's as unusual as 4 feet of snow in Death Valley in July. That is how unusual these deliveries are. And to me, that's really what is setting the trend.
Well, I think that's a great summary of the situation and where we are right now. I want to ask you a little bit more about these Chinese export controls on silver, because that was such a huge focus coming into the year. And I've heard mixed reactions about the implications it will have for silver supply. So anything further you would add there on the long-term effect on the silver market?
Well, yeah, I mean, you know, when you talk about doré bars, China refines between 60 and 70% of all the world's unrefined silver. Much of it makes its way back out into the Western markets. Now, there's a rumor that I haven't been able to substantiate that is saying that as of the last few days, same thing is happening in Switzerland, where they need to reevaluate things and are asking the importers or all of the refineries to apply for some sort of a export license that could take between 4 and 6 weeks. And in other words, you're talking the majority of all of when China refines the doré and much of it will go to Switzerland because the bars that China puts out really don't meet Western standards. So, the Swiss refiners, and in particular, Pamp Swiss, Valcambi, Argo Herreras, and Metalor will take these bars and melt them down and re-refine them into kilos and 100-ounce bars that the West wants. Well, now all of a sudden you're putting a massive delay on that because things are changing very quickly. When the massive refining engine that is China stops or mitigates or really puts a wall up against exporting out into the market, you're starting to see the reverberations. And I'll tell you this. Because of tariff threats, the 100-ounce bar and the kilo bar market in this country has become incredibly scarce with really high premiums because the threat of tariffs made it so that the large importers who bring these bars in were afraid to do so. So now you put in these export restrictions and problems with the refining in Switzerland. Nothing's coming in from the Royal Canadian Mint. They make 100-ounce bars because of the tariffs. And all of a sudden, you have a market that is really, really short on investment grade bars in North America, and it's getting worse. And this is without very little mainstream participation at all. I think it's something to certainly be concerned about if you're looking for 100-ounce bars, or if you're running a company like mine. It's becoming very difficult to find what is normally the easiest product to get.
Very interesting. And also on the note of China, I was reading this week that Chinese companies are already looking with the higher silver price at substitutions in solar panels. So I'm curious if you've been hearing about that, if that's something that could continue as the price stays higher.
Yeah, I mean, that is a rumor, and you know, who knows what happens to the quality of these solar panels. As you know, silver, it has the highest level of conductivity for not only reflection but also for heat, and I think they are looking to do that. And you know, if it goes the other way and the price goes way down, and they were able to continue to use it, it would just mean that they would sell more solar panels. The more efficient that you are with price, the greater the volume. You could give solar panels to everyone. So it's an effect of the realization that silver is becoming critical on many levels, and not just in photovoltaic. It goes well into, you know, AI and digital and electronic and military applications, not to mention monetary. So yes, there is that rumor. But to me, it doesn't really amount to too much. It's just, I guess, a indication of much higher prices, and maybe they believe that prices are going to go much higher, and they better figure out a stopgap to be able to continue to produce them.
Yeah, I think that's an interesting point. Obviously, I know you can substitute metals for one another, but the quality is probably a question that we should be paying attention to. And another point I've been hearing related to that, I think, is Chinese and Indian companies reaching out to silver companies directly, even silver companies that are not yet producing, to talk about securing supply. So I think that's very intriguing as well, and gives a sense of where their heads are at as the price rises. So anything that you have heard there that you think investors should be aware of?
I've been talking about that for well over a year, Charlotte. Sean Kuhn, who I'm sure you know, the CEO of Dolly Varden, has told me a long time ago, and I've been reporting it for at least a year, that, everyone's fixated on Samsung going to Mexico to open up a mine that was closed to take all of their doré and concentrate for 2 years. Okay, fine. But Sean said to me well over a year ago, in fact, it was at dinner, I believe, at the Vancouver Resource Investment Conference, which is about a year from next week. And he said, or a year behind last week, you know what I'm getting at. Anyways, he said, yeah, China has been coming for at least a year to Mexico and Peru in particular. Now, Mexico's number 1, China's number 2, Peru's number 3 in production, but they've been going directly to the miners, disintermediating the marketplace, buying doré and concentrate. Doré are the bars that the miners will crudely refine, and I don't know to what percentage, but nowhere near full refining. And concentrate is a byproduct sludge of the mining process. They will pay double what the West will, disintermediate the market, ship it back to China, and refine it themselves. Now, this is the number 2 producer in the world, going to great lengths, flying to, South and Central America to do this, and to Mexico, building a deep water port in Peru, doing all of these things to be able to do this. And they're already the second largest producer. So this has been going on for a while. And I think it goes to show, if it's that important for China to buy silver in a pre-production, pre-refining stage, sending it all the way back and refining it in order to disintermediate the marketplace, I think it tells a signal just how valuable it is. And certainly, in my opinion, far more valuable than the dollars used to purchase it. So yeah, these are all of these pieces put together are far more important than looking at them individually. What you have is the second largest producer of silver in the world, who is basically saying that this is not a metal that is properly valued, that in order to have an advanced society, one that is electronic and digital and AI and strong military and all of these things, that it's an asset that you need. And as we've documented for a long time, it's depleting. This will be the 6th year in a row of structural deficits of between 1 and 200 million ounces, if not more. And of the 800 plus million ounces mined, again, this last year, less than 200 million came from companies like Sean's that primarily mine silver. It's byproduct mining of copper, lead, and zinc, where the majority of the silver is coming from. So it's becoming harder and harder and harder to find it in large deposits. So it's no wonder that China is going to such great lengths. Samsung caught the headlines, which has been verified and validated a couple weeks ago, negotiating with a silver mine in China themselves. But yes, put it all together with being reclassified critical, export bans, and you can begin to see where this is leading if you take an objective assessment of it.
Yeah, I appreciate you taking all the little pieces and building them together into the whole. I think it's so important to take that step back and look at what's really happening. And as we have all this going on with the silver price demand, my impression is there are efforts to calm the market. So I want to talk to you as well about the CME Group margin increases. So what can you tell us about that? How can people understand what's going on there?
Well, you have to understand that the margin increases are something the CME has done for a long time in markets that rally, and it's specifically targeting the longs, which is kind of annoying. And so for people to understand what I mean by margin and margin increases, they did 2 margin increases in the last 2 or 3 weeks. The last one was the day after Christmas, on the 26th. on Christmas Day and before, you would have needed roughly $21,000 in your margin account to cover one 5,000 ounce silver contract. Put silver at $70. You know, you're controlling an awful lot, $350,000 worth of silver you're controlling with a $21,000 margin account. Okay. So they said, well, on the day after Christmas, we've just bumped it up 30%. So now you have to have $27,000 in your margin account. And if you don't post that into the margin account immediately, why then they liquidate it? And so everyone, let's say someone's on leverage and had to, bought 30 contracts on leverage, have enough, money in their margin account. And now all of a sudden they have to have 30% more in there. So they have to sell a whole bunch of these contracts in order to cover their margin. And selling begets selling. As the price falls and margin is increased, all of these traders on leverage get squeezed. Now, this is classic. This is called shaking the bushes. The big traders love this. They see, not only do they have a book where everyone is positioned, they know that who should not be playing in that sandbox. Now let's take a step back for a second. When we see in the first few days, 30 million ounces of silver delivered in the first 6 days, 18 or 19 in the first 3 days, 60 plus million delivered in December. These are the institutional or central bank, sovereign wealth fund, Teslas, Samsungs, Sonys. These are people that aren't using leverage and not using margin. I'll make it an easy to understand way. If you are looking at a home or a neighborhood in a gated community where the homes are 30, 40, 50 million dollars, do you think those people care what mortgage rates are? No, they don't. They come in and drop $50 million check, and it's probably their second home. The other one is up in, probably up in upstate New York in the Hamptons or whatnot. And so they don't care. But in a normal neighborhood where people are on mortgages, yeah, it's going to have a detrimental effect on the value of the homes, for sure, as mortgage rates go higher. Well, that's the same thing here. You get all of these traders who might be well-heeled, but not well-heeled enough to be playing in that sandbox, go in on leverage, taking advantage of the rising silver price, and then they jack up margins on a day after Christmas when most people are on vacation. They do this specifically to protect the shorts and for some stupid reason, but they do. And okay, so they do. They drive down the price. All these traders get squeezed. Silver drops. And who's sitting there? Thank you very much. Waiting to pick it up at subsidized prices. This would be the big traders who have been standing for delivery. So, but what's interesting, Charlotte, in every market I can think of, go back to 2011, they did the same thing when silver hit 50. And then it took what? It took 15 years to come back. But that's not happening anymore. Because what's different about this market than anything I've ever seen in 35 years is the standing for delivery. These contracts in London and in New York have a delivery option, but no one ever did so. They would use it in terms as cash settlement or exchanging warrants back and forth. Paper promises, you own it, no, I own it. No, you own it, no, I own it. And with warrants. But now they're saying, yeah, no more paper, send me the real thing. And that is what is distorting and blowing up this scheme that they've used for so long, and they can't hold it down anymore. Yeah, it goes down. Today's the second day in a row that we've seen it down, and haven't seen a second day in a row in a long time. Normally it's one day down, one day or two, 3, 4 days up. This is a game that every single time that they hit the price, there are traders in Asia just sitting there waiting, or big institutional traders here in New York who are standing for delivery. And again, no one asking, who the hell is this? And that should be the only question. Who's doing this? Is it the Treasury in the Exchange Stabilization Fund? Is it because now it's critical? The U.S. government needs it. We're building a $7 billion smelter. I mean, you can see the priorities are shifting, and at that level, the people who bring in billions of dollars worth of stuff don't do it for the hell of it. They do it because they've been instructed to, or they know where the playbook ends. All of this stuff in terms of margin hikes, which used to be the death knell of a rally, seem to be nothing more than a fairly significant speed bump. But you also have right now the rebalancing of the Bloomberg Commodity Index, where by law, and it starts today and it goes for the next week, all these funds that are way out of whack in terms of their balance, because silver and gold, to that matter, for that matter, have outsized gains last year that have created a mess up with the equilibrium of the portfolio. So they will be forced to rebalance and sell and drive the price down. Silver's going to look like a heart rate monitor for the next week. But who's there waiting to pick it up? That's right. That's the Asians. And that's right. That's Samsung and Sony and whoever is standing for delivery here in this country. So it plays right in. But at the same time, you have the January effect, where all the hedge funds need to redeploy money. So the volatility will be fantastic over the next couple of weeks. But Bank of America just came out and said, we can see silver going as high as $309. Now you're beginning to see it from the mainstream, where companies and banks that were incredibly bearish on this stuff forever are now flipping the narrative. You got the chief investment officer of Morgan Stanley saying put 20% of your assets in gold and do that by selling half your bond exposure. You got the chief analyst for Bank of America, Michael Hartnett, saying no, make it 25%. You got Jeffrey Gundlach, the bond king, saying 25% of, and this is a guy who's made his reputation, living, and nickname by selling assets that have a return. 25%, he says, of assets in metals is not overvalued. So we're beginning to see at the highest level a change of mentality, a change of perception of what these metals truly are. And it hasn't really gotten down here yet. But you can see it with what's happening on the COMEX and the LBMA, that we are in the midst of a change of, I think, perception and reality as to what gold and silver truly are.
Definitely. It seems like real changes are happening right now. And I'm interested to talk a little bit more about the price, because I know that some people feel a little bit uncomfortable when they see more mainstream entities making these very high price predictions. I know that you're certainly bullish on silver. You mentioned we're going to see some volatility in the near term. What are your expectations for price in 2026?
You know, I hate making those guesses. I think $100 silver is something. You know, Keith Neumeyer made it famous years ago with his triple-digit silver shirt that he sent me for during Christmas, maybe 4 or 5 years ago. And, you know, at the time people laughed about that, but he's not too far from being off. And in fact, if you could take a technical viewpoint of it and talk about a 45-year cup and handle formation that was broken. Now, a cup and handle formation in technical analysis is one of the most bullish formations you'll ever see, especially one that's 45 years long. So at the top in 1980, you had $50. At the bottom in the early 90s, you had $4. The difference from top to bottom is $46, right? So then you get back up to 2011, $50. It's rejected. That's the top of the cup. Then the handle comes down to where we were just recently when we broke through 50, and off it goes. Now, technical analysis would say you take the top, you take the bottom, which is 50 minus 4, 46, add it to the breakout, that's $96. Not too far from it. Now, at the same time, if you take right now the price of gold at $44.50 and divide by 45, well, you can see what that's going to be pretty easily. $44.50 divided by 45 is $99. 45 is pretty much the average price ratio we've seen for the last 100 years. And that's with central bank manipulation holding down the silver and gold price. Gold for Gibson's paradox, silver for the military industrial complex. We can go down that road maybe when I see you in Vancouver, what I mean by that. But the point of it is that whether you take the 100-year average, whether you take the breakout of the cup and handle, I think $100 is easy. But, you know, it's coming out of the ground at 7-to-1. So in terms of its geologic ratio, $44.50 divided by 7 is $635. As crazy as that sounds, I'm not saying it's going to get there. But put it in perspective when you see what Bank of America says. And they're using the gold-silver ratio as their barometer because they're saying $500 or $5,000 gold next year. So you take 5,000 and divide it by 45 and you get $111. Take 5,000 and, you know, divide it by 35 where it got down to in 2011 and you're at 142. Look, all I'm saying is that we're still undervalued. There's still a long way to go by every metric, whether it be historical price averages in relationship to gold, geologic averages that go back 5,000 years, and really an asset that's never been allowed to find real price discovery. So yeah, I think we still have plenty of room to go. But Charlotte, I want it to be very clear, you don't buy the problem people made in 2021 with silver squeeze is that they bought it for the wrong reason. And I think they became disenchanted with its performance. You don't buy silver to become wealthy. You buy it because it is wealth. For 6,000 years, if you look at gold and silver, cumulatively mentioned over 700 times in the Bible, it's been wealth through 2 world wars, German hyperinflation, the Great Depression, every pandemic, everything. And history doesn't always repeat, but it sure as hell rhymes. And now you see the biggest money in the world, the most well-informed money in the world, whether it be the central banks, the commercial banks, the sovereign wealth funds, or now the institutional traders here in the United States that are showing you through delivery of both gold and silver just how important it is. And silver now being critical in both the European Union and the United States, prioritized in Asia. And if you watched any of the videos I've done with Judy Shelton, 2 of them, where she says Trump will back the back end of the Treasury market July 4th of 2026 with gold. She's written a book about this. She's all over the place saying this. She was his nominee for the Fed in 2016 and an advisor and on his transition team. You're beginning to see that gold seems to be, whether it be here in the United States, perhaps backing the long end of the bond market, or in Asia and the BRICS with a settlement vehicle to settle imbalances in trade or currency. Gold is finding a way to, I think, be reintegrated quietly into the monetary system, and silver is just being recognized as something you better damn well have or else. And that's what we see happening between very large sovereign nations, who many of which have a head start on us. So yeah, it's going to be an interesting year. And rather than pick a price, I say we live in a world of probabilities. The probability that we see silver well north of $100 to me is rather strong. Could it be as high as 200 or higher? Sure. But to say that would be a guess, and an optimistic guess. But look, if I would have told you last year that we would see silver at $80, you'd say, well, that's a pretty big statement, Andy. Yeah, sure it is. 150% gain in a year is pretty big. So rather than continue with that, I would just simply say higher than most people would actually probably think possible would be my answer.
I think that's very fair, and appreciate you breaking down the price implications there. I know you're not such a prediction type of person, so that was great though to go through it. And I know I've got to start getting you out of here. I'm sure we'll have more to say in Vancouver, but before I do, I have one more question for you. And I wanted to bring up this AI Asian guy and all of those videos with you, because you're so good at helping us understand what's really going on in the silver market. And these videos that I'm sure people, if they're on YouTube, they've seen them pop up. They're pretty tricky because from what I understand, there's a lot of truth in them, but also they have false things going on in there. So what are you seeing there? Where do you think they're coming from? What should people be aware of when they see them?
Yeah, well, whoever is doing it is fairly well, I think has a lot of help, because the information that he's pouring out is nonstop. I've never seen anything quite like it. And under, I don't know, a dozen or 2 dozen different channels. A lot of it is very good. A lot of it is I take exception with, but I think in general, the information is fantastic. And I mean, it's almost as if there are entities out there trying to wake up the public who have never been awoken ever to anything that me or any of the guests on your channel have had. You have to be one of the few people up until this point who has the ability to break free from the herd mentality. And that's a scary, lonely thing. You come to a conference like VRIC and everyone loves to talk because they go back home and everyone says, oh, it's crazy Uncle Johnny again. Or, there's our crazy neighbor who won't stop talking about gold and silver because what's coming. And then all of a sudden they're right. And I think that it's been an uphill battle. And Rick Rule will tell you that you take from Joe and Jane six-pack to the Harvard Endowment Fund, which, by the way, did just buy a couple $100 million of metal, the Harvard Endowment Fund, which I laugh at. But he would always say that verbatim, from Joe and Jane six-pack to the Harvard Endowment Fund, the exposure to gold and gold-related equities, and I mean silver too, is 0.5%. So, it's growing. And what you see here is that everyone I talk to has seen this guy. And some of the stuff he says is flat out wrong. He talked about companies in my industry having to issue Form 8300s anytime you pay for anything over $10,000. Well, that's not true at all. And a Form 8300 is if you pay with cash. And that would be if you went to Nordstrom's or Bloomingdale's and bought your family $11,000 worth of clothing, you would have to, and paid with cash, they'd issue a Form 8300. Any retail transaction, any with cash, $100 bills or multiple money orders triggers an 8300. But you could spend $200 million with me and send a wire, and there is zero dealer reporting. He talked about an executive order, mentioned the executive order number that talked about the ability for, for metals to be confiscated. You look up that executive order, it doesn't exist in the way he says, and what it is actually like some form of advanced education bill. I mean, so there are holes in what he's saying, but a lot of what he is saying is fantastic. So I don't know how he's getting the information. It's almost like he's scanning all of the podcasts and sucking it in and then building. Look, I do an interview with, when you think of how hard that is to do, not as hard as you think anymore, because I do an interview with Mike Adams and the Health Ranger. And he has developed a new AI system and a book-making AI program where every interview we do, a book is done. 200-page book on an interview I do with him for 40 minutes with charts and graphs, and he sucks everything in to support it. And he's made like 5,000 books in a few weeks. So AI is changing the world, and it's even changing the way information goes out there. But you have to take everything, you have to try and fact find. That's why I use some of what he says, but it's hard to support a lot of what he's saying. Well, inside sources and a memo that he doesn't ever show. And, you can't go out and say these things in my position until it's validated. I'll say there's a rumor going around that JP Morgan says everyone that they sent out a memo saying close all your futures positions by January 31. Because we're no longer going to allow physical delivery, just cash settlement. There's a rumor out there that Morgan Stanley is saying something similar. There's all of these rumors that, if substantiated, it'll be a hell of a call. And then you're really going to think, who is this guy? But until then, I think you take it, all the information in, and, try to fact find it. And if you can't, let's sit back and see what happens. But to say it's gospel is dangerous, in my opinion. But overall, he gets an A for effort and a strong B+ for information with a little bit of stuff that needs a little bit of clarification.
Well, really helpful to get your take there. And I am interested to see if this does start drawing in the broader public, so we can track that and see how it goes. I'm sure we'll talk about it.
You're going to be a rock star if that's true. You're going to be at the top of the food chain, and we do deserve kudos, in my opinion, Charlotte. We've been right overall, and we haven't been conspiratorial. We have been right, and we have looked at things objectively, factually, and it's about time that the Wall Street crowd admits, hey, maybe you guys were wrong, and so maybe this awakening is exactly what the doctor ordered, and I'm all for it. But just take it with a grain of salt, what you hear, and do a little bit of your own due diligence if you hear something that you're ready to act upon.
100%. I agree. And I know I've got to let you go for now, but I'm sure we'll catch up again soon in Vancouver at BRIC. We'll see how the attendance looks there. I hope it's a busy show, but thank you so much for coming on now.
Yeah. And I would recommend anyone. That's a show I won't miss. Even living in Florida, flying literally to the farthest point in North America to attend the show, but it's one I wouldn't miss. And Jay Martin puts on a great show, and I look forward to seeing you upstairs in that room you're always in, and hopefully catching up and doing one live like we always do.
Absolutely. Well, thank you so much. For now, once again, I'm Charlotte McLeod with investingnews.com, and this is Andy Schectman with Miles Franklin.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.